Coming up, Tom and Scott take on key reversal carnage. A chaotic market playbook, deciding between flight or fight on a losing trade. Your calls and win with a look at today's markets. Our first letter is from Brett, and he's asking, what does it look like from the brokerage perspective when you get big moves like this morning? Okay. After hours or during regular hours? I imagine there's a lot more liquidity during regular hours. What happens to people's accounts? Do they just get wiped out if they don't have enough cash to hold the position? Do they end up owing the broker? Do stops even work in situations like this? Our friend Brett.
Brett sent me this email just a couple minutes ago, and I thought it was appropriate to start the show off today. So Brett, you're spot on topically. I mean, I woke up, I was actually up pretty much most of the night. Don't ask me why, because I was trading last night, and I thought gold and silver were really cheap. I actually bought silver last night at 64.50.
Good for you.
And gold at 42.54.
Good for you.
In the middle of the night. And I put an order in to sell it, and I got filled like 20 minutes later, up whatever, 50 cents or $1 higher, whatever it was. And then this morning they were lower, and I tried to buy them back again, and I missed them. I took a shower, got out of the shower, and the SPUs were down 50 or down 44 when I went in the shower. When I got out, they were up 150. So what Brett is talking about here is the 200-point move when Trump came out this morning and said something, very Trumpish, which is, I spoke to Iran, which you probably didn't do, and everything's going swimmingly, which I'm sure none of that ever took place. But S&Ps rallied, 160, 170 points, 200 points off the low, but they're about 160 points higher now. So how does a brokerage firm, Mr. Sheridan, deal with that kind of move in a very short period of time? Especially because people all night were probably, they were getting blown out in gold, they were getting blown out in silver, and I even bought bonds on the opening last night in the 111.
They were in the 111.
Yeah, I bought bonds at 111.29. I sold them at 112.10, like a half hour later while I was watching the game, and then they were back down to 111.29 this morning. But then they exploded. Well, they didn't really explode, but they're up a little bit now.
Yeah, not exactly an explosion. So the simple answer here is that margin requirements are pretty good for sizable moves. And if you think about, let's just take an S&P. So if you take an ES, which is ballpark 24,000, it's over 400, it's like 450 points, something like that, of a move at $50 a point. So while this was a massive move, well within your margin requirements. So you should be fine with that move. Again, it depends on how close you're playing to the vest. If you are fully loaded, if you only have enough for one future and you sell it, you're going to start dropping to a point where you might be liquidated. It is entirely possible. Most firms have an auto-liquidate feature for futures. Some do for options. Most for options are more manual. So what the firms are going to do, I'll say how we would do it. The way we would do it, we would look at size first. So if you have a 1 lot on, you're probably further down the line than somebody's got a 20, a 50, a 100 lot on. The firms will try. I can tell you, Tasty, we would always try to reach out to see if you could send capital. If you could send cash, we'd say, okay, we give you some time to send the money in. If we couldn't get in touch with you, they would go ahead and liquidate. Unfortunately for customers, when you sign an agreement with a brokerage firm, you're basically signing your life away to say you can do whatever you need to do to protect the firm. So then the question becomes, if you are left with a debit, so if you owe the firm money, then you have to work with the firm to pay that off. Hopefully you are capable of paying it off. If you're not capable of paying it off immediately, hopefully you can work out some sort of a payment plan. It's not a great situation. The big difference between today and if you go back almost a year ago to last April was very, very different when the market broke, because it wasn't just the S&P move that was the problem, it was volatility. So volatility, the VIX, and this was a rally, not a break, but last April was a break. The VIX went from around 20-ish, right, upper teens, to about 60. And that, you can't prepare for that. So what happened was, it wasn't just, especially in the SPX, which was our biggest problem, is that you had positions that were still way out of the money, but because volatility exploded, premium exploded, and accounts just absolutely blew up. So the key here, the takeaway here, big reason to trade small. If you can, trade defined. If you're trading futures, futures are futures. You're either long or you're short. Be careful. And again, leave yourself some dry powder, meaning don't fully lever your account, because if you do, you're going to put yourself into a position where there's a possibility you're going to get caught and you're going to get squeezed. There's nothing worse than being forced to get out when you have a position on, especially if it winds up turning around.
Scott loves to depress everybody.
God.
That is your key. One of your strengths is trying to depress the consumer.
See, I think it's just bring realism and reality
reality.
to the world.
Here's the
reality.
bottom line. The buying power requirements cover you up to 2 standard deviations, and it's very rare to have a 2 standard deviation move. It's less
Not
than,
always, Tom. It depends on what happens with
I
volatility.
understand, but this, especially a move like last night or this morning, volatility got crushed because it's an up move. So it's not usually a problem.
Yeah, but if you sold an S&P future and you had enough to sell ones for around $23,000, $24,000, and that's all you had, and they're up, they rallied 200 points, they probably are going to liquidate you.
That's $10,000.
Yeah.
Maybe, but that's that's the way it goes. But I'm just saying, it's not.
Okay.
But you're not going to end up owing the broker.
Here's the difference. You just say that's the way it goes. Sugarcoat it. Say, don't worry, just keep trading.
You're trading.
I'm trying to give people the real behind the scenes.
You're trading $300,000 worth of stock that has, in this case, you got to think about things just probabilistically, and the chances of something happening, of where it puts you in a situation where you're underwater, it's like less than 2%. That's it.
Yeah, but when it does, that's here. This is what you'd say to me. Don't answer a question you want to answer. Answer the question that Brett's asking.
I
He's
did.
asking, what do
right.
brokerage firms do if you get into trouble from a margin risk perspective? That's it. That's what I was giving an answer to. So happy Monday. Brett, I hope that helped. If you have other questions, you can send me an email, Scott@Lossdog, and we'll cut Tom out of this conversation because clearly he's not interested.
Thank you.
There
You're
you
welcome.
go. Okay, Maria from the Dog Pound says, after a big move in price, for example, recently with /ZB, how do you decide whether to sell a put or a call versus selling a strangle? When would you choose a strangle?
You choose a strangle, Maria, when volatility is super high, and it is high right now in ZB because of this down move. It's not super high, but it's high. Volatility in bonds actually explodes to the upside, not to the downside. So it's not, but you could certainly sell a strangle. If you think we're oversold, then you want to do a skewed strangle where you sell a closer to at the money put and an out of the money call. That's what I would do in this case. I
would say for you, you must have been like, oh my God, if you're buying, because you were selling 114 puts. So if you're buying outright, if you're buying a future in the 111 handle, that to you's got to be like massive pot odds.
It was, but I only held it for 13 or 14 ticks.
All right.
Because
you never go broke taking a profit.
Yeah, but I thought I was going to have a chance to buy. I did have a chance to buy it back this morning, but I was 120.
Are you selling 112 or 111 puts here?
No. I might on a down move, but we haven't. I missed it. Last night the markets were too wide. Like I tried to sell puts last night in crude oil when we first opened. The markets were $4 wide. Then I went and looked at gold, untradeable. And silver, forget it. The markets in silver they didn't even exist. And the gold option markets, in some cases last night, were $10 wide. Like you couldn't sell.
And that's the problem when you have moves like this.
Yeah, you couldn't sell a put last night in gold options. So that's why I bought the futures. But I was trading the micros because, when these things are moving around at 200, gold was down almost 300 last night, over 300 at one point. When it's moving like that, you're way better off trading. You're way better off trading the micros. You don't want to like lose $50,000 on a one lot.
Which could happen.
Well, it moved $30,000 last night at one lot. I mean,
one lot.
Yeah. So a micro moved 3,000.
Yeah. So I mean, think about if you're a market maker in there, and the markets look horrible. But what are you going to do? Where are they going to run and hedge?
Oh, there's nothing. I mean, nobody was even trading the options last night. It was all just the futures. But Maria, after a big move like this, I mean, obviously I'm a contrarian, so I'd rather sell a put than a call. But I'm going to tell you right now, I've been selling puts for the last 3 days, and bonds have gone from about one. This is after they dropped from 116 to 114. Then they dropped down to under 112 last night. So this has not been a good run in bonds for anybody trading bonds. The real question now is, what does the Fed have to do? Because the whole game plan here. I mean, I shouldn't say game plan. From anybody's perspective now, everything's changed. I saw a really good podcast over the weekend on a discussion on what are the odds that the Fed has to come in and raise rates right now, and that would make total sense to me if this war continues, and I think that's put the
first of all, it's a conflict, or it's a what is it? It's an excursion. It's not a war.
Whatever it is,
right.
But the idiots who are making the decisions with respect to what we should be doing are putting themselves in a position where I don't know if they can get out of. Because if you have to raise rates here, it is not going to be pretty. It is not going to be pretty. Under no scenario does raising rates here help the stock market, help the bond market, or help anybody, stability-wise.
There were 3 cuts projected, then it dropped to 1, right?
There's no cuts projected now.
Now it's none.
Yeah.
And what is the odds of a potential increase? I haven't looked
well,
at
the chance right now, you see the short-term rates. So this is all a yield curve right now. So the long end is going up dramatically. It's about to trade 5%, but the short end is still I think the 10-year is 4.35 or something. So what's happening is the yield curve is widening, the widest it's been in years. But the short end hasn't moved up as much because people are still thinking that this is long-term bad, short-term, and blah. We'll see. So that's the challenge.
Dog Crown says, it's fun when Scott gets feisty on margin explanation. You can tell he actually managed thousands of client issues and tried to be fair.
Who wrote that? His wife?
No.
Thank you. That was who wrote that? Slappy?
That was Arthur, our friend Arthur.
Thank you, Arthur. I always said to myself, I think I'm a very fair and
that was your
reasonable
friend
person.
Steve, who closes anybody out just if they breathe wrong.
Okay.
Oh my God.
Ay, ay, ay. Okay.
Anyway, thank you.
Yes, next up. While I have come to learn that risk-on trading environments like this morning are opportunities for active traders, these fast market reversals scare the crap out of me. I need a playbook for days like these. What have you got for me? Says Gary.
Gary, you know what? What you got to do on days like today is just put a pillow over your head and hope you're right. I mean, that's the playbook. I mean, if you think anybody, there is no such thing as a playbook for, there's absolutely nobody this morning. All night, the entire world was spent selling bonds, selling gold, selling S&Ps. Every single rally was met with sales. And then all of a sudden this morning, make one stupid comment and boom, 150-point rally. It's crazy. There's no playbook for that.
Yeah. I mean, but now that we've moved like this, I think if the question is if you want to put your toe in the water, I'm agreeing with Tom, just trade very small if you're going to engage in this. There's great opportunities, when the market's moving like this. But obviously, as we just said, gold, think about if you were trading 100-hour gold, it's a 30, 40,000, maybe, $40,000 move. So on the ES, 200 points.
It's a contrarian play, man. Everything last night was a contrarian play. But you know what?
Yep.
If you were 2 days earlier, it was still a contrarian play. It's easy to sit here and say, I was buying stuff in the middle of the night just because, but it was small and I was just taking how could you expect to turn around like that? Silver was down $6. Now it's up.
Yeah, but, and it's interesting for me. I'm looking at the VIX. VIX futures down $1.60 to 23.60, and VIX cash is 24.21 down 257. They're still elevated.
Oh my God!
So,
yeah.
What's that?
Yeah.
Yes.
Yeah, so the market is clearly not saying that all's good and get back in the water as a raging bull. So
Nobody's saying that.
Right, I would fully expect to see we're going to have big swings up and down until this dust settles, which I think is going to be a while. And I'm not saying the dust settling is just with what's going on in Iran. You're going to see this is going to ripple through the bond market. We're just talking about, are they going to need to raise rates, forget cutting rates? There's a lot to digest here. The market's got a lot to work through here. So I would expect to see big swings over the next days and weeks and maybe months, which is really good for trading. But I get it, not necessarily easy on the stomach.
Yeah. Rodrigo in the dog pound says, are prop firms in general legitimate? Their business model seems kind of sketchy to me. What's your opinion?
Yeah, Rodrigo, you're spot on. It seems kind of sketchy to me too. We've been out of the prop business for a really long time, and we were never on the retail prop business. We were only on the professional prop business, so we've actually never been involved in that. But I've only read horror stories from, I shouldn't say all horror stories. I've read some horror stories and some just like, mediocre, but the prop business in general, it's a weird business. They don't want to take any risk, and you don't, most people that get involved with prop firms, they don't have enough money to trade on their own, so that's the reason they go to a prop firm.
Well, wait a minute. I want to be clear. Are you answering this from a should I go work at one, or in general, are they good or bad for the markets?
Well, I think he's asking, should I consider one? And
I would agree if you're considering one, no. I think in general, I think they're amazing. The good ones are great for the markets because they bring in tons of liquidity.
Oh, what are you talking about? They're not talking about professional prop firms. They're talking about customer prop firms. They're talking about the prop firms.
I didn't get the full email,
Okay.
so I didn't.
Yeah, they're not talking about professional prop firms. They're talking about customer prop firms where
going to work, going to trade for one.
Yes, that's what
not
they're
stay
talking about.
away.
Yeah, and so the challenge with prop firms, Rodrigo, is that most of the prop firms are their single purpose is to pool funds to allow you to trade as much as you want intraday. Which obviously you don't have enough capital. Most people that go there don't have enough capital to do that on their own. Their money's the first money out. The fees are generally high. The strategies are limited as what you can do especially with derivatives, and it's mostly just a scalper's game. I think for some people, a very small percentage, they're fine. I think for the majority, it's a good way to learn the business maybe, but it's not a long-term sustainable just because of the fees.
Agreed.
Okay, next up. All of my trading mechanics are based on Tom's research and content, so thank you. A trader friend of mine cuts his losses early on trades that go against him. Bearing extreme circumstances, I fight to the bitter end and believe the ability to do so is a critical skill. He thinks I'm stubborn. I think he's a quitter. Who's right?
I'm with you, dude. I'm with you. I fight to the bitter end, and I can tell you that I'm not sure that in the end there's a huge difference between either approach. I think sometimes when you fight to the bitter end and you have the ability to get it all back, it is a really critical skill and it feels really good. I'm not so sure that's also not being a little bit stubborn, but I fight to the bitter end with most of my positions. I like everything to be green in the end. It doesn't always work out that way, but that's what I like. And I am a fight to the bitter end person. As long as volatility stays high, I fight to the bitter end. Extreme circumstance would be volatility would crap out, and I would get out of the position and just take my loss. But yeah, I'm a fighter. I'm stubborn that way. But I don't know that there's a huge difference either way. So I don't know if either of you are right necessarily. I think there's an argument to be made for both sides, but I'm with you. I take the exact same approach.
Scott?
Yeah, well, listen, I'm going down with the ship for sure. Mm-hmm. I'm a fighter. So I'll try to keep working the position, but I think the takeaway here is these are guidelines. there's nothing here that says absolutely if you do A, B, C, and D,
Right or
then
wrong.
it's going to work. You got to be comfortable with what your positions are. And if you're more comfortable and it's working for you, it can't be a knee-jerk reaction where if it ticks against you, you get out and you go, I shouldn't have gotten out. But if you get to a point you say, here's where I'm getting out, I've had, the positions moved against me enough, get out and move on to something else. To Tom's point, there probably isn't that much of a difference between taking it down to the bitter end and getting out earlier. So it's just, I think, for me, taste and preference and what you're more comfortable doing.
Okay.
Yeah,
There you go.
I like to torture myself to the end, because
Okay.
I'm used to. I've been trained in the art of torture survival.
Okay.
By the way,
It's a good skill set.
it's a good skill set for life.
It is.
See, you have some
a
people who
critical
are trained in the
skill.
art of survival where they can go out into the wild, give them a knife.
No,
and a gallon of water. That's not us.
Yeah.
That show, what show scares me the most of anything ever?
Oh boy. What?
The show where they
Some matchmaking
Survivor.
show.
No, not Survivor. The other one where like Naked and Afraid. What the ones where they send you into the woods?
Oh, yeah.
Okay.
What's that called? It's
Yeah,
a-
something like naked and whatever. Yeah,
Yeah.
that's not happening.
They send you into the woods with like a knife and no clothes, and you have to like survive. Like I would
No.
basically
Who the
just
hell
stab.
want that? No.
No, what do you mean? They do a whole show on this.
Oh
There's
my
like
God, no.
Yeah,
Crazy.
yeah, they do.
10 years. I'm just saying that's the one thing like I could not do is go into the woods.
Okay, our friend Arthur's on the line. Hi, Arthur from Brooklyn.
Don't be shy, by the way. I'm Tom. He's Scott.
Hey.
She's Sol.
Hey,
Call it.
hey, how are you? Good
Hey, Arthur.
morning.
Good morning, Arthur. What's up?
Hey. So I was looking today and noticed that Apple and Microsoft have IV in kind of mid-20s, which I think is relatively low for them.
Yeah, well,
and
they're
I'm
both
constructive on
post-earnings.
them. Yeah. So I'm constructive on them, thinking in the leap space, how to get long, and was curious if you guys had any ideas, and if that, I know not what Tom would do. Think more long-term trend following type strategy, not selling puts. Though I'd be open to hearing if I should be thinking some other way. And was just trying to figure out how would you guys construct that trade. I'm trying to tighten my mechanics, always for life, which I guess is what we all try to do.
Well, I'm long. I'm not long Microsoft. I am actually long Apple. I have a covered call in there, but I'm in April. But if you wanted to go longer term, I mean, Apple is one stock that's on its butt for sure. Why not do like a poor man's covered call? Buy a long-term leap, like at the money, like the 150 strike or the 155 strike, and sell like a 165 or 170, whatever you can get some decent premium. I'm not looking at a screen right now, but maybe a 160 or 165 shorter term against it, and then just keep rolling that front month call every month. I mean, I like a poor man's covered call. If you want to do a leap strategy, I like the poor man's covered call the best. Buy an at the money long term, like maybe 120 days out, and sell something front month about $10 or $15 higher, and just keep collecting the premium. And hope you're right.
Got it. Thank you. And what's the theoretical best mechanics on the long versus short?
Long the way we do it is long the 50 delta and short around the 30 delta. So you're net long every time you do it. You're long 20 shares of stock,
Yep.
theoretically. So you're long about the 50 delta, which is the at the money, and you're short the 30 delta, which is like probably 2-3 strikes out of the money. And you're just, that gives you net long 20 shares. So if you do it 5 times, you're long the equivalent of 100 shares of Apple, but you're collecting a lot of premium right now.
Got it. Okay, cool. Hey, thank you. That's awesome.
Perfect. That's what I would do for sure.
Thanks for calling, Arthur.
Yeah, thanks. Appreciate it.
989 Lossdog. Don't be shy.
Yeah, talk to you guys soon.
Yeah, thanks,
All right,
Arthur.
bye.
989 Lossdog. Scott, Sol, Tom, and don't be shy today. We are all fired up. We're busy.
Yep. Okay. Next up, with an account size between $300,000 and $500,000 and strictly following a controlled risk premium selling strategy, is it realistic to aim for the collected premium to become my primary or even sole source of income? Says our friend Vittorio. He is from Brazil.
Vittorio, it is okay. It's realistic to aim for 25% of the premium collected, not the premium collected. So based on all our research over the years, let's say you collect $100. It is reasonable to assume that $25 of that, it would be your source of income, would be a reasonable expectation for you. 25% of the amount of premium that you collect. That takes into account managing early, that takes into account losses, adjustments, everything else. But the objective at the end should be to take in around 25%. You're killing it if you keep 30%, and you're underperforming if you keep 20%. So 25% is right in the middle of the range. And God knows how many hours of research we did to get to that number, but that 25% number is a really good back of the envelope ballpark number. So if you collect on a $300,000 account, just to give you an idea, and let's say you were collecting, I don't know, 1/10, let's use the middle of yours, 400,000. And let's say you were doing 0.2%, which would be $8,000 a month, you'd be looking at, somewhere trying to collect, in the neighborhood of 2,000 to 2,500 based on that number.
Okay.
Okay, and that is a reason. And when you think about that, when you multiply it out, let's just say 2,500, times.
So 30 grand.
Yeah, it's 30 grand. It's wrapped around a 10% return. I mean, that's just giving you that's giving you the most conservative case. Okay, that's all I'm doing. Just giving you a super conservative case, but that's what you're looking for.
Okay.
Now that also comes with a 75 to 80% probability of success. That's why the number's so high.
Got it. Okay, there you go, Vittorio. Next up, quick timing question. Do you have different time windows for different instruments, specific hours for commodities versus indices, or certain days when you focus on certain asset classes? Just wondering if there's a rhythm to how you structure your day across all of them. How do you structure your day?
Well, I think this is the question. My answer is going to be, it depends on what I'm trading. So if I'm trying to scalp, if I'm scalping futures, my time horizon is going to be minutes to hours. And I'm going to be out, for sure by the end of the day. I'm going to be done, if not much sooner. I might be in and out multiple times. Versus if I have a position on where I am short premium, that to me, if I'm going out, 40 days-ish, I'm going to leave that and I'll adjust as need be. But other than that, if it doesn't need to be looked at, if it doesn't need to be adjusted, I'm going to leave it. So my time frame is very different depending on what I'm trading and the reason that I'm trading it. So again, if I'm scalping, much shorter, like Tom said, he bought some bonds and it was out in 20 minutes. That's very different than, what you just said. I think you just said you have a covered call on Apple, which I'm sure you're not even looking at today.
No,
So,
right. Yeah, I mean, I'm the same as Scott. I have different time frames for different instruments. Futures, like Scott, I might be a few minutes to a few hours, maybe a day or two, but like I'm short puts in the bonds. I'm not even looking at them. But when I bought bonds, those I was scalping. Same thing. Like you said in Apple, a covered call. I'm not even going to look at it. But I have positions on in other stocks that, if the stocks rally up today, I might scalp out of them. So
wait a minute, if they rally?
Well,
we're not in the rally phase right now.
No, we're rallying right now, but the stocks that I'm long, I'm not back
Are
to
not
even
moving.
yet.
Yeah, there's actually, I'm looking at a lot of these stocks. They're really,
I mean, I'm not back to even. That's all. There's some stock because I bought a bunch of stocks. Don't ask me because I'm a contrarian. So I started to buy some stocks last Thursday and Friday, and so far, it hasn't really worked. But it's better than it was overnight last night. That's for sure.
If you're long, yes, that is true.
But when I trade options, I'm pretty much live to that 45-day, 21-day kind of rule. So that's my time frame. But when I'm trading futures, my time frame could be a few minutes to a few hours to a few days.
Yep.
So it's different. But when I trade like digital assets, I'm probably holding those for 6 months to a year.
There you go.
I wasn't that bullish on digital assets until I went out to dinner this weekend with my friends.
Yeah.
And
Oh, God, here we go. I know, by the way, I hope it was a good dinner. Please tell me they don't all think that that digital assets are going to zero.
They do.
What?
And so I mean, these
Ay,
are just my friends. They're old. They don't know anything.
What is wrong with them?
They're-
That's
I
actually
happen
a
to
nice
like every
comment for you
single
to
one
say
of
that
them.
they're old.
What is wrong with them?
They're old. They're not too smart.
What?
Yeah, that's it's,
They're
I,
smart
God.
people.
I made my bed with my friends. I can't change friends now, but no, they're not that smart. And so
I'm actually surprised you haven't said that you're bringing up the average of
oh,
intelligence.
I am, but not enough to make a difference. There's too
Got
many
it.
of them.
You're
So-
trying, but it's a heavy
There's too
lift.
many.
It's a heavy lift, and between all of them, they all think Bitcoin's going to zero. So that made me just want to close my eyes and buy
more.
I did buy a little Bitcoin last night when it first opened in the cash market, but I didn't buy enough. I just where is it right now? I can't even see it. Let's see.
Cash is 71,310.
Oh yeah, so it
305,
opened
71.
like just under 69 last night.
Jeff says, are we going to call it the Jules indicator?
No, Jules.
No,
Jules.
he wasn't there, was he?
Oh yeah, he was there.
Uh,
Yeah, no, this was the dream team. Food was fair it wasn't that good.
ooh.
Yeah, I know, surprised, but
Ooh.
it was a very nice dinner. But we did get into discussions about things that we probably shouldn't talk about, like
Oh, no.
digital assets.
Oh,
Because
Wives. That group is not good with wives.
no.
no, that group's not good with wives. We were trying to figure out how many divorces they were.
A lot.
There's a lot.
Wow.
Right. If you add the divorces up, it's multiples of the number of people at dinner.
Oh yeah. They averaged about 2 each, but they also
geez.
I couldn't even I forgot some of them weren't even married. It's weird.
Oh my God.
So yeah, it was a pretty funny conversation.
That's great.
Okay. I do want to mention that I made some new merch on the store.
Wait,
Remember, it's
You're killing my buzz here.
and
We're
I
having a
got
good-
you stuff too. I got Tom some T-shirts and hoodies that you'll see him wearing soon enough, and I added colors too for Scott. So we'll see.
Now I'm
Thank
trying
you.
to take all Soul's friends that are unmarried with all our friends that are unmarried and trying to match them up. It's not going well.
It's a
not
new date.
going well.
It's the Lossdog dating site.
It's not going well.
Actually, we haven't even started. But anyway, so remember, it's swag.lossdog.com. So go get your stuff. All right, next up. Am I missing something important when I think about buying a December/CL future and selling a current month CL future? That seems like a fairly obvious play for a return to contango, says Tony.
I could have sworn we had a question just like this, and the answer is no, they're not the same. You are missing something in that they're two different deliverables, and so you're not. You can play for a return to contango, no question about it. I mean, that's just your call. That's a futures calendar spread. It's just and you can clearly play that. Lots of people do. There's no, unfortunately, on the retail side, there's no real advantage to doing that. It's very hard. It's hard to trade it because you have to put up the capital you don't get any capital relief as a retail customer, and you also can't enter it as a spread. So it's kind of, you have to leg it and you have to put up way too much capital. It doesn't move that much. I would probably stay away from this, but it is not an obvious return to contango. But right now you're in, you got a lot of stuff going on in the front month because of what's going on in Iran. So the front month oil is going to trade, way higher than December oil when the assumption is that December oil would get back to normal.
Okay, let's take the call. Paul from LA. Hi, Paul.
Morning. Good morning, ladies and gentlemen.
How are
Good
you?
to talk to you as always.
What up, Paul?
Thanks for calling.
I have a couple of questions about things that I should probably know about, but I'm not too embarrassed to ask, and maybe some other people have the same question.
Fire away.
First of all, is the Dow still 50,000?
The Dow.
DJX is 46.5.
If you were trying to sell at 50, you missed it.
Oh, man.
You better call Christy Nome and ask her if the Dow's still 50.
I was going to call Pam Bondi and see if she has like a
Oh yeah, I
sticker
meant
going
Pam
on her
Bondi. Yeah, I'm
forehead.
sorry. I meant Pam Bondi.
Anyway, so my question is, Scott, span margining. I'm waiting for you to flip the switch there on the pattern day trade rule. If you could get to that, that'd be great.
Yeah.
But until such time, For my zero TTEs, I'm trying to get it done in
Yes.
ES options.
Yeah.
Sure.
And my question is, it seems that my margin requirement, my buying power, is more, and I was expecting it to be less. In other words, if I do like 15 wide strikes and pick up $1, I would think that they would only need to hold $2. If you understand where I'm,
No. If you're, I'm sorry, if you're collecting $1 in premium,
yeah. Let's say I'm doing the micros, and it's $3.
it's
A
going to
$3
be,
wide spread.
span is based off of, it's just pure risk. So it's based off of how far you are away from the money. It's not the premium. I mean, that has a part play in it, but it's really how far you are away from wherever the underlying is.
But-
so it's not
Okay.
going to be, just 2 times whatever you collect.
I hate to break this up here, but it actually is. It's coded wrong on Tasty. That's all.
It's not. When you say, so when you're telling me
Yeah.
that it's just double, no.
No, the maximum requirement is what you can lose. So the
How do you
maximum.
know, how do you know what you can lose if you sell?
It's a
If you
it's a
sell a
vertical
strangle,
spread.
how do you know what you can
He didn't
lose?
say strangle. You said vertical spread, didn't you?
No, he said a
Yes,
strangle.
sir. Vertical spread.
No, you said
No, vertical
I
spread.
apologize. I thought you said a strangle.
No, you said vertical spread.
I apologize. Then
Yeah.
that is correct. It should just be whatever it is that you can lose. I
Yeah,
apologize.
it's whatever the max loss is. So
Yes.
yeah. So if you're doing the micros, it's $5 a point, right? So if you're doing what'd you say, 15 points?
Yeah.
Yeah, it's $75
And you're
bucks.
less whatever you take in.
Less whatever you take in. So if you take in
Yeah.
if you I don't know how many points you're taking in, but if you're taking in a third of it, then then the most you can lose, let's just say, is $50 per each one lot.
Right.
Yep.
Right. That's why I
Sorry,
think that doesn't
I
show up that
apologize.
way.
No, I
thought
know
you said
it's
strangle.
coded wrong.
Sorry. Yeah.
It's a coding issue, and you can write to support, and the risk team there will change it to whatever it's supposed to be, but it's just a coding issue. And a lot of firms, the reason it's a coding issue is because they span margin prices it one way, and the Merck has a special override when you have vertical spreads, but a lot of firms don't code that special override in, and that's what they didn't do.
I see. So you're saying I have to call in or write in, and
Yeah.
they will change it
Yep.
just for that particular trade or on my account?
Well, they what they'll do is they won't issue any kind of call for it. They understand what the max is that you can lose, and they'll make an adjustment.
What they can do is they can
So it's
work
for trade.
with Apex, the clearing firm, if you're
Yeah,
a Tasty.
that's
which
right.
I'm assuming you are. And what they can do is they can suppress the call if there is a
Yeah.
call.
Most
Gotcha.
firms code this wrong, just so you know, because it's coded wrong because it's not part of the way that you get certified for span. It's just a weird little nuance, but I've been dealing with that for years. It drove me insane myself. Yep.
Oh,
We
okay,
actually
well,
call it the driving Tom insane
Yeah.
piece of coding. So
Yeah.
we did that
only because
intentionally.
we were building a futures exchange, so I had to deal with this, and that was one of the issues that just drove me nuts.
So what you're saying is that Scott is not going to change the pattern day trade rule just to spite Tom? Is that what I'm hearing?
Well, what I'm
No,
saying is the
that's
pattern
still
day trading rule
happening,
doesn't
and
apply to this.
And I believe that from the last I've seen, that should be in effect next month.
They said April 22nd or something.
Yeah, like in April, late in April.
Third
That
week
should
of
be in
April, they
place.
said.
And Tasty, from everything that I have been told, is ready to go on day one. So that's going to be
That's
an
what I'm talking
amazing.
about.
Yeah, that's going to be an amazing change. And the CME is not going to realize how much business they're going to lose on the retail side for people like you, who will now be able to go back and trade SPX, SPY, whatever, instead of trading ES.
My man, that's what we're talking about. Let's go.
There you go,
There you
Paul.
go.
Let's go.
Thank
Ciao, man.
you. guys have a good day.
Yeah.
Thanks,
Bye,
you
Paul.
too.
You too.
Bye, Paul. Okay, next up. I'm approaching 70 in a few months. I have a good amount in my IRA, close to 1.5 million. I'm currently working and plan to retire by 2029. By then, I'll be 72. My current salary is around $460K. Need direction to convert to Roth, says our friend Dave.
Wait a minute. First of all, as I'll speak for Tom, why are you retiring?
Yeah. What are you retiring for, Dave?
Sounds like you have an amazing job. Keep going.
You make $460,000. What are you going to do? You're going to retire? You're going to die. Don't do
Yeah,
that.
you're gonna have to be like Tom, sit in a rocking chair and drink iced tea and start drooling.
No.
So, Dave, this is not my area of expertise, but I think you needed to flip this to a Roth if you were going to do it a long time ago. Now you're faced with, I think at 72, you're approaching required minimum distributions. So what I would do, reach out to, you could do wherever you're trading. Reach out if you're at Tasty. There's great support there. Reach out and talk to somebody, in the accounts department on the IRA team, and you can ask them what it is to convert. But I think you missed that window. I think if you were going to do a conversion, I think that was a long time ago. So now it's more about your required minimum distributions and IRS guidelines. You go Google it, and it's going to say, let me just look. Let me just look IRS. Let me pull this up. But anyway, reach out to somebody.
Pretty sure
And
it is
at your firm,
72.
and they'll be able to tell you.
Yeah, I don't know.
Let's see.
I'm too
RMD,
young. I'm
here we
only
go.
52.
The current required minimum distribution
Sure.
age for traditional
They're
IRA is
930.
73. So if you turn 72 after December 31st, 22, and you turn 72 and 22 or earlier, you were already required. The age increases to 75 for those born in the 60s or later. So that's not you. Anyway, and the first RMD is due by April the following year. But again, this stuff's out there. It's very regimented. You can reach out to whatever firm you're trading in. They should be able to give you good information, but I don't think you're converting. So for those that don't understand, I assume you're in a traditional, which you fund with pre-tax dollars. In a Roth, you would fund with after-tax dollars, but it grows tax-free.
Right. So he can't open a Roth right now?
No, you can't. I think you're past that age. Right? What would be the point? Because you have to start taking the money out anyway.
Yeah.
I think that's past.
Okay. Wow.
Let's say there is no age limit, but anyone is from children to seniors can open and contribute to a Roth if provided they have earned income. So if you're retiring,
Right.
that would be a goner.
It's earned income.
See, another reason not to retire. Tom's
yeah,
right.
there you go. You don't have to
There you go.
retire, Dave.
Tom's he's spot on.
Okay. Ready? With
do it.
recent fireworks in ME, the natty gas prices in UK, Europe have gone up to 200 to 300%, while the Henry Hub nat gas prices have barely moved. I can understand some fluctuation in the spread, e.g. transportation costs make minor spreads not suitable for ARB, but not sure at these levels. I would expect that at this level, it would make sense for EU to buy US natty gas and ship to Europe. But considering Henry Hub nat gas has barely moved, this evidently is not the case. Could you explain why this is not happening?
No.
Well, it has to be. No, I can't tell you for sure, but it's got to be the cost of moving it. I mean, if you factor all of that in, why did front month
But
oil, whatever, 5 years ago, go negative?
300%.
You were getting paid like $40 or $50 a barrel because there was nowhere to put it. So in this case, clearly there would be, if there was an ARB that a country could do this, they would be all over it, and they go, look, here's what we're going to do to keep prices down. So I'm not saying that there isn't some sort of an ARB here thinking something's out of line, but it's not just as easy as just shipping it, bringing it in from somewhere else. That has to be the answer.
Yeah, obviously. Otherwise,
They would do it.
and I'm not so sure that the prices have actually gone up by 200 or 300% either. I mean, it might just be a short-term thing, but something's weird about this. I don't know the answer. I don't know the answer.
Okay.
But I
I
can
bet
tell
you're
you
happy
something.
you have an electric car right now.
My natural gas
Let me go back.
bills have gone way up.
Wow,
Everything
shocking.
has gone way up. I know.
Well,
Shocker.
but natural gas is under $3.
And because you have an electric car, you don't know what it is to buy gas.
No, thank God. Well, I haven't bought gas in a year.
It's crazy. I was buying gas in January at Costco. I was paying mid threes, and now I'm upper fours.
Oh my
Okay.
God.
It's a big move.
It's a huge move.
Well, nobody told you to drive a gas guzzler.
Right.
There's that.
There you go. There is that.
I just plug my car in. I'm very happy.
Yeah.
I don't understand
Yeah.
why everybody doesn't have an electric car at this point.
I don't either.
Well,
I really don't.
I was reading an article about who makes the Hemis. That Ram, Ford,
Which
I
one?
think Ram, whatever. They were all geeked about coming out with the new one, and now it's like the worst car ever because I think it gets like 10 miles to the
Oh
gallon.
my God.
Yeah,
Horrible.
it's crazy. But like, I can understand people not buying a electric car because they don't want pure electric, but I don't understand like why people don't go hybrid.
Hybrid. I
Because
think that's
they
going to be my
become
next
so
move. I think my
expensive.
next move is hybrid.
They're so expensive.
Hybrid?
Yes.
Yeah, because hybrid, you
prices
got
are
both
insane
electric
right now.
and an ICE. You got an ICE. Well, we'll say internal combustion. I don't want to use the word ICE.
Yes.
But you have an internal combustion engine and the electric, so the battery. So I believe that they are more expensive than if you go one or the other.
Yeah, I believe they are, but I'm just saying that the hybrid cars are great.
They're amazing.
Great.
They're great.
Except
I mean,
now
you never ever put gas in if you just
See,
drive around.
now, if you were
Unaffordable. I
really
can't
nice,
afford a
what you
hybrid
would do is
anymore.
you'd pull an Oprah and you would say, you'd say, so you get one, Scott, you get one, Peter, you get one, Jeff, Emma. See, you could do that.
Maybe I will.
Let's do it.
There you
But
go.
why do I have to buy Sol a car when she just takes mine whenever she wants anyway?
Yes. Not whenever.
Just when she needs it.
Not every time I need it, but anyway, we're moving on. Watching Tom's old Karen the Super Trader interviews. Love her trading mechanics, mentality, and philanthropy endeavors. Anything you can share about her now that you reflect back? Says our friend William.
Karen, the super
We
trader?
love her. And yes, everything that you said on the email is right about Karen. The SEC was wrong.
I mean, all I can say is that yeah, I mean, basically, she's the first person I ever met where the SEC killed her. But I mean, where the SEC killed somebody.
It's not even funny,
but
though.
Karen was a special person. I
Yeah.
mean, I honestly didn't love her trading mechanics because wasn't the way I trade, and but her mentality, she was a rock, and her philanthropy was incredible. She gave everything away, literally everything. I remember calling her once and because I was going to travel somewhere, and she had been to that country, and I called her to ask her for some recommendations, and she was teaching a Bible class in Cyprus, and she goes, "Can I call you back after my Bible class?" And I'm like, "Yeah, sure."
At least she was smart enough to know not to invite you to the Bible class.
Yeah.
She was smart enough. I mean, the last time I saw her, she came to Chicago because she was a crazy North Carolina basketball fan. Even though she went to Wake Forest, she was a crazy North Carolina fan, and North Carolina was playing at the United Center. So she came to go to a game, and I took her out to dinner, and we had a really nice chat, and I felt like, she wasn't giving up at that point, but she was a little beaten, and it was sad. It was like just sad. I was bummed after that dinner because like the whole process had just gotten to her. But Scott and I watched her from the beginning turn
insane.
Turn nothing into something. So when people go, it's all bullshit, all this kind of stuff. No, it wasn't. We watched the whole thing.
It was not.
It was
I agree
definitely
with you.
not.
It's not how I would go about it, but crazy impressive.
I mean, her timing was the best ever. She got long the market in the end of 2008, early 2009, and she stayed long for the next 15 years. And she killed it. And I mean, none of us thought that was the right trade at the time. But she kept rolling and pressing and rolling and pressing, and it worked. I never would have done it ever. So I guess from that mentality standpoint, it's amazing. There's a pretty good book out on her. What's it called? help me here.
I don't know. I didn't know there was a book.
Either.
Oh, somebody wrote a book on her. It's good. It's called The Lamb of Wall Street,
Oh.
I think. I can't. I'll have to look up the name. I think it's called like The Lamb of Wall Street, and it reflects on her philanthropy and her stuff, and it's really good. It's a nice book. I gotta look.
So
at
here's a question for you. May she rest in peace. But for you, what would be your animal if somebody was to describe you as an animal?
an animal.
Yeah, well, you just said the lamb. So, like, there's the wolf, the lamb, and I get the lamb, like, taken out to slaughter. I'm assuming that's what that was. But if somebody said, if you had to pick an animal, what would it be?
If I had to pick an animal.
The name of the book is The Lamb of Wall Street.
Is it? Okay, yeah. What animal? I mean, I'm a little. I could be a goat, like
Goats. You make a lot of noise. You like to eat. That's
Yeah.
actually not bad.
It's not bad. Yeah, I could be a goat.
You know, when you were saying that Tony says like poop everywhere?
Yeah.
Actually, in Spanish, or at least in Ecuador, we say like goat's poop because it's everywhere.
Really?
Yeah,
I
so
thought
it's
the
goat's
poop
poop.
that's everywhere is like the
It's goats.
rhinoceros or something.
Oh, rhinoceros.
Hippo.
Oh, my God.
Okay. I don't think I've ever seen that. So
Haven't you
Let's
never
split-
seen it? That's how they get. That's how they scare the children. They just poop everywhere.
no.
So, speaking of
Goat
animals,
is
Tom, you know enough about pigs.
Yeah.
I was watching, I'm not going to say what I was watching, but I was watching a show. They had to get rid of a body. So they threw the body into a pig, pen.
Oh.
Yeah.
Pigs will eat a body?
I don't know. What do you mean? I know that.
I didn't
Well, you know
pigs
that
are
kind of stuff, because I'm
even
sure you see that on
carnivorous.
TikTok.
Are they?
I do not know the answer to that question.
I have to look at that. Will pigs,
that's
because
a
the
real
body was gone.
tangent.
The body was gone. They said
Yeah.
they put it in a pig pen and the body was gone. I mean, if you're talking about like wild
Yes,
boars,
pigs are omnivores, and they will readily eat a human body or even attack and incapacitate a person if given the opportunity. So, Tom, stay away.
if you're talking about wild boars, yeah. If you're talking about those
No,
like
it says pigs.
regular pigs,
Oh,
Yeah.
we were just thinking
Pigs
of
by
getting a
nature.
piggy for the office.
And the behavior stems from their natural instinct to scavenge and consume available food source, including meat.
yeah, I guess.
Okay, little piggy is out.
By the way, I had the pork belly burnt ends.
Oh gosh.
Speaking of pigs, yeah,
Speaking of pigs, delicious.
pork belly burnt ends. Those sound. How could they be bad?
No, and they like sugar. They were a little sweet.
Yeah, sure. How could they be bad?
No, they were little Miss BBQ. Okay, continue.
You're like my
Yeah,
daughter.
pork belly burnt ends.
She was very little, and I was reading a book to her, and she's like, oh, what's the pig? And then one day at dinner, she's like, what's this? I'm like, it's pork. Like, what's pork? I'm like, it's like a pig. And she goes, a pig? And she goes, but it's so delicious. So there you go.
There you go.
Okay, one last one. Does the industry view a transient student different from a study abroad student? And if yes, how do you advertise your transient student studies to differentiate yourself from those who studied abroad? I've been a transient student at 2 universities, a study abroad student at 1 university solely because it was connected to the National Science Foundation program. How do I advertise myself if indeed transient student has more bearing? What do we think?
I would
Well, I
never
had to
even
look
say
this
that I
up.
was a transient student. I would just say where I studied. But go ahead, Scott. What do you say?
Yeah, I had to look this up. So let me just tell you, a transient student takes courses temporarily at a different institution, often domestic, to transfer credits back home, usually for convenience versus obviously study abroad as somebody who goes for cultural immersion, typically in a foreign country. I mean, I personally, when I was hiring people, I didn't care. Like, if you were
Right.
studying abroad, I thought that was interesting. And if you were at multiple universities, I thought that was interesting. So to me, I'd be curious as to why this person thinks that there is an advantage of one over the other, but you have both. And to me, what I would look at if I was looking at this resume, I would say you're somebody who loves to go out and seek knowledge at a lot of places. that would resonate well with me if I was interviewing you.
There you go.
Yeah, I mean,
that's a
I
good
would.
selling point.
First of all, I would never.
Right.
I would say
Yeah.
that most people in the U.S. wouldn't even know what a transient student is compared to studying abroad. So
Correct.
I would just say I studied at these universities.
Multiple universities.
Of course, multiple
I know this was
universities.
a young person
Yeah, and I think
who
that
was
would read
interacting with
really,
us in one
really
of our
well.
socials.
Read really
Yeah.
well on a
So
resume.
there you go.
Yeah, I think that I like kids that have, that have tried to study. I mean, I studied abroad. Did you study abroad?
I mean, I grew
I-
up abroad.
Oh
so
yeah.
I didn't. I couldn't
I
get.
did?
I got a double major. I couldn't do it in 4 years if I studied abroad. So.
Well, I studied abroad, and I
Where'd
really
you go?
London.
I didn't know this
Oh,
about you.
come on! His
Look at
dart
you.
prowess.
Come on, my dark
How old
prowess.
were you?
What are you new?
I was.
I guess I am.
19 or 20.
Here, driving the
6
prime
months?
minister or member of parliament or something.
Yeah, I worked.
driving a
I
Rolls
interned
Royce.
for a member of parliament.
Member of parliament driving his Rolls Royce.
Yeah.
No
Yeah.
wonder you think you're the shit. Oh my God.
I went
Now
to
it all makes sense.
I went to London School of Economics, and then I interned for a member of parliament.
So,
Oh God. I've
like
never,
this, I went to the
okay.
London School of Economics.
Yeah, I shouldn't have asked.
And then I mostly spent the whole time interning for the school, but mostly my job was to eat lunch with him and drive around his Rolls Royce.
Oh, okay.
And he thought it was like they didn't have in the parliamentary system in UK, they don't have a lot of staff.
Right.
So like I was his only staff person, but he was a pretty powerful labor backbencher, and so we would eat every day
very
lunch in the
cool.
members' dining room,
Yeah.
which was I was 19 or 20 years old. It was
Wow.
amazing.
Wow.
And then he thought it would be like he was really embarrassed to ask me to drive the car, but he didn't like to drive. He's like, and my job right before my last job in the States.
Oh my
was
God,
driving
driving a
a truck
truck.
in New
We're
York
not
City.
getting into
And
this.
he's
We don't
like,
have time.
He's like, would you mind driving? And I'm like, sure. He's like, I have a Rolls Royce. Have you ever driven a Rolls Royce? I go, no, but I'll figure it out. and it was. He's like,
Only when our
you don't
chauffeur
mind, do you? I go,
didn't
no, I'm
show
fine.
up."
I'm
Yeah.
good.
Yeah, only when our chauffeur didn't show up and I needed to drive.
So I drove around that Rolls Royce for like
Right.
six or 8 months. I was there almost, just under 8 months. And we drove everywhere, to Wales, where his constituents were, and everywhere around the city. It was great.
Wow, that's such
I
an
didn't get-
amazing experience. How did you get that opportunity?
Oh, they selected like a bunch of American kids, like 20 of us. And I don't know how I got
But
it.
who's they?
Some program. I
Okay, but
applied
did
for
you
it.
apply for the
Yeah, yeah,
program?
yeah, yeah.
Okay, so there you go, people. Go out and look for programs like that, because that's
Who you
an
get, who you
amazing
get to drive
opportunity.
members of parliament around in the Rolls
Do you know
Royce.
what we
Yes.
did? Do you know what we did when we got to London?
What?
When all these 20 kids got there, we ended up at some, at some meeting place, and they had a giant hat, and we picked names out of the hat.
Yeah.
Like,
That's how you got your member of parliament?
Yeah, that nobody had any idea. Like, not a single kid knew any members of parliament.
Sure.
So we picked names out of a hat from members of parliament that had agreed to take an American intern.
That's great.
And we all picked members out, and I happened to get like the most powerful of all of them. And he was an interesting guy. He was a socialist. He was a left-wing socialist who was anti-abortion.
What?
Wow.
Yeah,
That doesn't make sense at all.
I know it didn't. He was very outspoken. He was in the newspaper like every day, and
Wow.
he was hardcore left-wing. He was a litigator.
Yeah.
And so he was crazy smart, but he was really anti-abortion, and he was basically, he was a pure socialist.
Wow, that's
Crazy.
That's a strange mix.
Strange
Market
mix.
talk.
I was going to say the poll results. Do you own a hybrid or an EV? No is 71%. And I can't see it anymore, but I'm going to make fun of one of our dog pounders. Grumpy Mike was saying, a real car has a carburetor. Anyway.
Yeah, Mike.
And not
Yeah,
a,
Mike.
And not a freaking chip.
Yeah, Mike.
So, anyway, but we love you. I love you.
Hell yeah.
Well, my car has both, Mike. There you go.
Yeah, a
Market-
plug-in is a really good option. All right, market talk.
Not a lot of movement since we've been doing this show.
And let me
You got
tell Mike
Bitcoin.
something. If you lived in Chicago and you had to fill your car up with gas, a real man would change their
Their
opinion.
oil?
No, just
Oh.
standing out in the freezing cold, filling your car with gas, you change your opinion very fast.
No joke. So we got Bitcoin up to 71.7, up 1,200 yet. Oil down almost 9, 89.32. ES up 131 at 66.90. Gold down 108 at 44.66. NQ up 514 to 24.6. Silver up 56 cents to $70.25.
That's a huge move. Huge move.
VIX future is coming up a little bit. It's only down 110 right now to 24.10. VIX cash is down 227 to 24.51. That's why I'm saying with volatility up where it is, I'm expecting a lot more movement up and down. Bonds up 25. It's funny, up 25, almost a point, 3/4 of a point, and it's 113.06.
We'll take it.
Apple up 4, AMD up 5, Amazon up 6 and change. So some decent movers. That's it. We'll see. I mean, it's gonna be interesting to see. Right now, it looks like not much is going to happen the rest of the day, but I am guessing something is.
Really?
You don't think so?
The tape action on Friday, I don't know if I don't think you were actually watching this. I think you were on a plane.
I was. I had Wi-Fi on the plane. I was watching.
Okay, because they rallied the S&Ps on Friday afternoon.
At the end? At the end. 80 points in like 4 minutes.
I was going to say like 70 handles.
Yeah, in like 4 minutes.
And then they opened them down last night like 70 handles. So they gave up the entire Friday afternoon on the close.
They were lower yesterday on the open than they traded on Friday.
Yes. But
Yeah,
that
by like
rally,
15 points.
the rally Friday afternoon was crazy because that was like a crazy markup at the end of the day. And
Yeah, but it's also, didn't Trump come out and tweet that, wasn't that the whole thing, that he came out, he had a tweet on Friday afternoon, didn't he?
I have no idea.
I think he did.
I turned his
That's how you
tweets
got to
off.
do it. Just wait for him to tweet something, and then we're either going up or down.
Well, I turned his tweets off like 10 years ago, so I don't watch anything he ever says. But
Fair enough.
But they rallied like 70 handles, and then they gave it all up last night again, and then they rallied 150 handles this morning. So it's been kind of crazy. I think they took a lot of risk premium out today. First of all, the gold and silver moves last night really surprised me. The oil move down 10 from where it was doesn't surprise me at all. And the S&P move and the NASDAQ move does not surprise me at all. I think the biggest surprise for me is really gold and silver. I never thought you'd see silver back in the low 60s. And I never thought you'd see gold in the 4,200 handle again, not for a long, long time. And also I didn't think you'd ever see bonds in the 111 handle again. Not this year at least. Crazy.
There you go.
Yeah.
Nobody knows anything.
Yep. Nobody knows anything.
There you go. All right. Happy Monday.
Happy Monday.
Get your helmets on.
Yeah.
Thank you.
We'll see you tomorrow. Bye.
Bye.